Alrighty, good morning traders and welcome to the morning coffee session once again this morning. And we're going to go ahead and take a look at the markets. We've got a few trades actually set up, ready to rock and roll that we're currently holding on since last week. And this week hasn't been a very big week of new positions. We've got a lot of trading opportunities, but nothing has gone ahead and fired off yet. Now, we have looked at the euro. There's a news report this morning. The news came out for the euro. I believe it was the economic sentiment out in the eurozone, and that news has created a little bit more pressure on the euro crosses. We're anticipating some sort of upside move on the euro, but we did say yesterday and in the weekly outlook, we did mention that the euro was looking for an oversold condition, which means that traders, as the euro starts falling, we're anticipating a rally to the upside. So this fall that we're seeing, the news that came out, the news that's pushing the market to the downside is all part of the plan, right? It's all part of the plan. And so as we go ahead and continue to focus in on our trades that we've got open right now, and we've got a couple of euro crosses that we're currently sitting into, we all understand that this is part of the plan, right? We know that the market is looking to push the euro a little further down before we start seeing some rally. And if that's going to be the case, then we may get new opportunities on other euro crosses as price goes into the oversold condition, so we can go ahead and start looking to buy once again. But eventually, we should see the euro start gaining ground and start rallying up. Now, let's go ahead and take a look at the fundamentals this morning, see what's going on, and then jump it back into the technicals and see how the technicals are set up. Now, I trust everyone's got their cup of coffee and ready to rock and roll. I still got my usual cup of coffee here. It says here, I don't need Google. My father knows everything. Yep, that was a gift from my son. Don't think it was a compliment. Was it a compliment? I'm not too sure. Let's take a look and see what's going on with the market. All right, so here are the details right here regarding the fundamentals out this morning. We did see that the economic sentiment out in Germany came out, and it didn't come out very, very strong. It came out at 8.7, which is down from the 20 that they were expecting. So the sentiment is definitely down in the eurozone. This is what's playing out in the market. We can see that the euro is, in fact, falling to the downside. Now, we've got some more data coming out this week. Don't forget about CPI tomorrow. This is yearly CPI for the pound. That's something we need to go ahead and pay attention to tomorrow. And of course, we're back again tomorrow morning at 9 o'clock. So we'll go ahead and review exactly what's going on in the marketplace at the time. Also, the Canadian data, CPI at 8:30 tomorrow. Not too concerned about that. It's monthly data. And I think all eyes on, of course, the FOMC coming out midday tomorrow, or at least 2 p.m. tomorrow, Eastern Standard Time as well. Well, traders, all eyes on now on the euro. Let's go ahead and take a look and see what's going on. So if I go into the chart right here, you can see that the euro, I've got the euro US dollar open up here, and I can see a big move to the downside. You can see that on my dashboard on the right hand side, you can see weak Aussie, weak Canadian, weak Swiss franc, weak euro, weak New Zealand dollar. We've seen some strong in the pound, JPY, and US dollar. All right, so let's go ahead and take a look at the trades that we've got currently open right now. And I want to remind everyone, of course, the strategy that we trade. I do have a video that I've gone here and completed last night. I'm going to post that video right after the session. We spoke about the best trading strategy for 2020, and I've gone ahead and released a part 1 already, and that you can find in the videos. Part 2, where we talk about equity management and how we're going to go ahead and manage the risk around the strategy we trade. That is actually, in fact, going to be posted right after this session. So check it out. It's going to be part 2 of my best trading strategy for 2020. Now, as we go ahead and take a look over here, in our, let me just go ahead and flip over to the chart. Here we go. So this is these are the trades that we currently have open right now. You can see that we are holding on to 1, 2, 3 euro CAD currency pairs. So we got 3 euro CADs, we got 3 euro JPYs, we got 1, 2, 3 now. Actually 4, 1, 2, 3, 4, 4 euro US dollar set up right here, and then we've got a US dollar CAD trade as well. US dollar CAD. We've been holding on to that trade. We said we're gonna hold on to this one, traders. Hey, listen here. If you say to me, big dog, hold on, we were 15 pips away from the trade yesterday from the target. Why didn't we take a profit? Well, it's only one single entry point. I'm not too concerned about taking profit on one single entry point. The money is actually in these trades right here. Here is where the smart man's at. Euro CAD, Euro JPY, and Euro US dollar. That's where the real money is. So I'm not too concerned about the US dollar CAD. You can see that we did go about 15 pips. How far are we now? We're trading about, you see, this is it right here. This is the, yeah, we're about 15 pips away. Price went ahead and moved down. I see a bit of consolidation. Price has now moved away from the target. And we've gone now 61 pips away from the target. So we've moved about 45 pips away from the where we were trading at. Again, not totally concerned about this one right here. And let's go ahead and take a look at the pairs that we do have trades in. Now, this is the one pair right here. This is the Euro US dollar. We've got 4 trades that are active on this. And you can see our prices come back down and retest this support level right here. We are expecting a correction move. Now, if I take a look over here, I do see an expansion phase that price has gone ahead and moved into. And it's from this consolidation that we're seeing right here. I'm also seeing that we have a small bit of consolidation that also placed a bit of sideways range in here. So there we popped out of this right here. So we've also broken out of that contraction phase right here. Seen a little bit of expansion move to the upside and then breaking down south. So we will be expecting price to come back up to retest that expansion level, which is right here at the lows, or at least the support level of that contraction phase. So again, not too concerned. We've seen this across the board. Remember yesterday we reviewed this and we said, hey, check out the euros right here. All of the euros are looking for an oversold condition, all right, to go ahead and start looking to buy in on. And so as we go into that oversold condition, it's going to be setting up new opportunities for us. And we've got a couple of low probabilities right here that we're going to go ahead and pay attention to this morning as well. But we should all be good to go and ready to rock and roll this morning. Now, let's go ahead and take a look here. By the way, good morning, Denise. Karen's in the house. Good morning, Karen. We've got Craig. Craig says coffee in hand. Fantastic, Craig. Sharon says, good morning, big dog. Good morning, Sharon. Nice to see you here. Euro Aussie hit to target. We'll go check it out in a moment, Sharon. Let's just see here. We got Jason says just added to the position on that pullback on the US dollar CAD. Oh, all right, fantastic, Jason. A little early though, on that trade. We also got, let's see here. Good morning, Vida. Good morning to you as well from Melbourne. Fantastic. Is that Melbourne, Australia, or is that Melbourne here in Florida? All right, let's go check out the add-on positions right here. I'm going to go through the euros, make sure that we do have all these trades setting up. But you'll see as I go through the euro, the euro pairs, excuse me, we'll see that the euros have lost a little ground from yesterday's rally. We had a little bit of rally taking place at the early start of the day, but it has pulled back since we had the news out this morning at 5 a.m. And yeah, you can see that little bit of rally that took place right here. Didn't sustain itself for too long and then pulled back again. News definitely pulled it back a little bit. And then, of course, we'll be anticipating price to move up to the top here. So as we continue to monitor this right here, we'll continue to monitor the trading opportunities. So we've got a few trades setting up on the Euro Aussie. And so let's go ahead and take a look at the actual setups this week. And here it is. Actually, I'm gonna go in and zoom in on. This is going to be a lot easier right here. All right, there we go. All right, so moving on to Euro Aussie first. All right, so Euro Aussie, in fact, that is correct. Yes, we've actually hit the Euro Aussie target this week. There it is there. So let's go ahead and mark this off here. So Euro Aussie actually is now a hit target. No no opportunity this week right here. And there it is there. No opportunity. So if we had any sort of penny position right here, we'd go ahead and cancel it. Let's go to EuroCAD. So we're going to start eliminating some trades that have already played out this week. And we got the EuroCAD that's still active. Right, there it is there. EuroCAD still active. Let's go to the Euro JPY. All right, so I'm going to move this now into a penny position right here. Right, because we spoke about it yesterday. This is working itself into a penny position. Let's go to take a look at the Euro JPY. Euro JPY is also take a look right here. We're also moving into a penny position. Now, granted, traders, we are currently already in on this trade. We're already buying in on this trade. We're active from a previous trade. But this week, for those that are not in a position, this week it certainly looks like it's starting to build up. Right? Look here. Trade opportunity happening right as we speak. In fact, at the close of this candle, I believe, let's see here. Yeah, at the close of this candle will be your first entry point. So the close of the 1 hour, which means about 10 o'clock this morning, you should be getting a trading opportunity on the Euro JPY if you have not already got one in yet. So check that out. The close of this candle, it's buy time. All right. Let's go ahead and take a look at. Oh, I keep moving that around. Let's take a look at the next one right here. Euro New Zealand dollar. Euro New Zealand dollar has gone ahead and hit its target this week. We didn't get in on this particular pair right here, but that's okay. So this one is now a no trade right here. And it was a low probability in any way, so there's nothing too much to be too concerned about there. Let's go to the Euro pound right here. Euro pound, we see Euro pound as a unhit target. Looks like we may be heading into a penny position on this one as well. Let's go ahead and move that to a penny position. And let's go to Euro US dollar. We all know Euro US dollar has gone ahead and fallen quite to the wayside. And there it is there. Oops, I keep having this every time. I'm going to have to update my chart. So we got this moving south. Looks like at the close of this candle right here, we may also have a buy-in opportunity. Let's see if we didn't get one earlier on today. Let's see here. No. So the close of this candle, just like the, so this is also going to be a penny position right here. Right here. So it looks like on Euro JPY, Euro US dollar, both of them are actually going to be setting up a trade. So we said it's going to be a low probability. It looks like it's turning out to be a trade that never, ever brought itself back up to the target. And so this is going to be definitely a trade. So two of these trades this week. If you have not got in already on a trade, then Euro JPY and Euro US dollar are at 10 o'clock this morning. It's going to be a go. All right, it's going to be a go for a buy based on the strategy we follow. Let's go to the pound crosses. Take a look at the pound crosses right here. I'm just going to go to the ones that are unhit, like the pound JPYs. Let's go to the pound JPY. There it is there, pound JPY. And pound JPY is good. We've got a hit target on pound JPY. So we'll move on and mark this off as a hit target this week. All right, and there it is. So this is a no trade right here. It was a low probability too. Let's go to pound New Zealand dollar. And traders, this is how we eliminate trade setups. And as you can see right here, we did hit our target this week as well. So we're going to mark this off as a hit target right here. No trade on this one either. Also a low probability right here. So no surprise that we didn't get in on that trade. Let's go to pound US dollar. And here is pound US dollar right here. Pound US dollar has gone ahead and hit its target as well. So we eliminated that one from the batch right here. And as you can see right now, if we eliminated 3 of the low probabilities, actually 4 of the low probabilities so far, all the pound crosses is not an option this week. All right, it's not an option for this week. We still got a few euro crosses out there that we could possibly trade. We did mention that the euro JPY and the pound, no, my bad. The euro JPY and the euro US dollar are still hot commodities for 10 o'clock this morning. So for 10 o'clock this morning, we're going to be buying positions on both of those if you have not already been in a buy. Now, I am currently holding a buy on both Euro JPY and on the US dollar, Euro US dollar. So I'm already in on that. No big deal for me. And I will remain bullish on those two pairs. All right, let's go ahead and continue. JPY, Aussie JPY. We're looking for overbought condition right here. Let's go ahead and take a look right here. Aussie JPY. There it is there. Not in on any trade at the moment right now. Let's go take a look at the charts. Aussie JPY, and we'll see why. Well, actually, Aussie JPY this week is actually a hit target right here. So that we can go ahead and eliminate for this week as well. So with all those pairs that we had set up, ready to go this week, check out 1, 2, 3, 4, 5, 6 of them already is a no-go. All right, and any pending orders we'll go ahead and cancel. Let's go take a look at the Aussie US dollar. And here is Aussie US dollar right here. And let me just go ahead and change it to. All right, here we go. Aussie US dollar. We've got a hit target on Aussie US dollar right here. All right, let's go ahead and mark it off. All right, that's going to be called a no trade right here. Also low probability. So check out the low probabilities. Only one Euro US dollar, the only low probability this week that we're actually seeing turning out to be a possible trade opportunity. Actually, not a possible, a trade opportunity at 10 o'clock. Let's go ahead and take a look at the last one right here, US dollar CAD right here. That is also a trading opportunity. And let's see, a US dollar CAD. And that is also a hit target this week as well. Hit target this week. Let's go mark that one off. Wow, look at that. All right, so we've eliminated all the pound crosses, all the JPY, all the Aussie crosses, New Zealand and New Zealand against the CAD, US dollar against the CAD, also eliminated this week. We've only got some Euro crosses setting up right here, and the only one that's really looking good right now is the Euro JPY and Euro US dollar. Traders, I said this yesterday. I said, hey man, we've got so many opportunities this week, but the fact of the matter remains that these opportunities may not turn out to be trading opportunities. It all depends on how the market is moving. If the market is moving really tight inside consolidation, or if it's at a support level and not going to get to our entry point, it is what it is. All right, it is what it is. The most important thing right now, traders, is that we've cleaned up the charts a little bit, or cleaned up the opportunities, and now we're sitting with two good opportunities. If you have not got into a trade already, Euro JPY 10 o'clock, you're going to have a buy, and you're going to have a buy on the Euro US dollar. What's great about this strategy is that we can anticipate, we can predict, we can see exactly where the trades are coming. So we know it's coming. It's coming. Euro US dollar and Euro JPY. Now the other pairs, not so much. But let's go into a deeper analysis to see exactly what we can anticipate now still with those crosses that we're in with deeper positions. We've got quite a few positions on the Euro US dollar already. We've got positions in on the Euro JPY and Euro CAD. Those are the 3 Euro crosses that we currently are holding on to position. Check out the data right here, or at least the charts, and let's go ahead and take a look and see in a more detailed analysis what the heck is going on. Are we going to hold on to this baby, or are we going to cut it short? Well, the answer to that is we're never going to cut it short. That's not going to happen, right? But let's go ahead and take a look and see what's going on right here. All right, so I'm going to go into the, I like to go into the daily time frame. Let's pull it into EuroCAD first. And check this one out right here. All right, so here we're looking for price to hold off here at the support level. Now, if I go ahead and move a little further down right here, traders, we do have a range target. What is the range target? Well, we did break out of this consolidation right here. So we taken the distance right here, and that distance equals that distance. This is what we're calling the range target right here. So this is the range target. So price could move down a little further down south to around about 41.69. I'm going to call this the worst case scenario, right? We could see price moving back up again. Now remember, we're trading against the euro and euro's trading against the Canadian. We've got two currencies trading against each other. So if we're going to get no if we're going to continue to get weakness out in the euro, we'll see price moving down. But if we're going to get a little strength in the Canadian, which we are anticipating, then this could push EuroCAD further down south to reach that target. So this is the possibilities. So which means, traders, what? It means that we have to go ahead and take a look and see what the Canadian cross may do based on US oil. Is US oil weakening? Is it strengthening? What's going on with US oil? Well, we're going to go ahead and check it out as well right now, but let's go ahead and take a look at the other pairs first. So let's jump into Euro. Let's see, Euro JPY. All right, so we're still looking for that crown right tip to come back here. Price took out the low right here. We're looking for a correction move to come back up again. So we are expecting correction. If you look at the crown swing right here, if I go on ahead and let me see if I can hide a few things here. All right, so what's happened is price has gone ahead and created a nice little AB boundary right here. There it is there, AB. We had a little bit of a pullback, looks like a 382 pullback, and price is down here at the 127. So this is what we call a possible irregular flat. If you don't know what an irregular flat is, it's simply where price goes ahead and takes out a previous, comes back to a retracement level, takes out the previous low right here, and then moves inside this AB boundary for a deeper correction move before price goes ahead and actually dips back down south. So it's an irregular flat. Some of them might find this to be some sort of harmonic pattern. It could be a cipher pattern. In fact, if you want to go ahead and I'm going to go ahead and use the tool that I have at hand right here, and I could go ahead and mark it off. Let's see here. Oh, sorry, my bad. I was wondering what I was trying to do here, but now I remember. All right, so here it is. We could have some sort of harmonic pattern appear in here. As price comes down to this level right here, looks like it's down at the 11144. And if we start pulling back up again, there it is there. You can see right here, a nice butterfly pattern. This is what could potentially happen right here. It's called a irregular flat, but at the same time, it may create these harmonic patterns that will also help to define where these turning points of the market. Now, don't forget about the crown. We've got this left tip. This is the right tip of the crown. So price maybe anticipate a upside rally to about this is what we're looking for. We're looking for an upside rally to around about 300 pips. We're looking for a 300 pip upside move on this particular. So we've got a lot of confirmations confirming that yes, when price finds support, we'll start seeing some sort of upside rally. Now, traders, this is very, very important. Okay, what's important here is that I do not get to my 1.618 extension. If I get to my 1.618 extension, then all bets are off. I'm not going to look for that right tip crown. I'm not going to look for that harmonic pattern. I'm really simply going to look for a correction move, very shallow correction move, and then maybe a further dip to the downside. So I'll look for another level of support for price to get to. Now, where is that? Well, if you take a look at the chart right here, that's down there around about just below 117.20. All right, so let's go ahead and recap this again. So if I'm looking at price to work, if price works its way down all the way down to the 1.618 down here, then I may see a little bit of a correction and then a further move to the downside. This is where I want to go ahead and start looking to rebuy again if I want to go ahead and do some manual execution right here. And the reason for that is because this is where we're going to start expecting a deeper correction move. I'm not at all looking and focusing on a crown right tip right here. All I'm really focusing in on is that price is going to come back to a deeper correction move. So it may be to retest this level right here, maybe to retest that level, but I know that we're going to go into a deeper correction move. So this is what's important. All right, this is how we determine patterns and how we anticipate patterns to create turning points in the market that we can identify early. All right, and so this is critical right here. If we see the market turn around, head back up north, we know we're going to head into this right tip. We're going to look for price to move up about 300 pips and then turn around and head south. If price moves down to the 1.618, then I'm not looking for price to move back up here. I'm looking for a short retracement, which means something like this, and then a dip down here before the deeper correction takes place. All right? Those are the two scenarios, but I'm going to have to wait for price to define what it's doing by setting up some sort of pattern. All right, that's the way we're going to roll on this one right here. Now, let's go ahead and check out the Euro US dollar. This is the one we've got plenty positions in. We've got 4 positions in on those. In fact, if we take a look at our break-even point on those, on the Euro US dollar right here, our break-even point is sitting at 863. So 1.0863. That's where we're at. We're down 82 pips on this. Not a big deal. We're not over leveraged on this. We're doing very good from an equity point of view. I'm going to be honest with you, traders. Hey, I'm a straight cat. I'm going to say the way it is. On this trading account, because to the size of trading account, I've gone a little bit more aggressive on this. I'm not going to, I'm not going to beat around the bush. I'm just going to tell you straight as it is. I've gone a little bit more aggressive on this. So I've placed in a little bit more risk on this account just because it is a smaller trading account. I have limited the pairs that I'm focused on. All right, I'm limited on the pairs that I'm focused on. Now, the reason why I've gone a little bit more aggressive on this particular trading account is also because of the fact that, yes, the account's small. And you'll see the video that I post that I'm going to post right after this video about equity management on the daily targets. I go in with a more conservative because I've got a bigger account size. I've got about $156,000 trading account. I've gone in with a, believe it or not, 0.04%. That's the amount of risk I've placed on each trade. Very conservative. But I am looking at 28 currency pairs. So I've spread the risk across the board, gone in on 28 currency pairs, trading the daily targets. All right. Check out the video right after this. I'll be posting it. You'll see if you've subscribed to the channel, you will get an alert pop up saying, "Hey, big dog," well, whoever it's messaged to, it will say, "Hey, got a message for you. Here's a new video that's been posted." So make sure that you are subscribed and you do have the notification bell gone ahead and ticked on, or at least click on the notification button. All right. So, anyways, this trade right here. What was I? Now I've lost my train of thought. Let's go back to the chart right here. Let me think what I was going to say. Oh yeah. So we've got a little more risk on this trade. There's a little more risk, as you can see right here. If I go into my settings right here, you can see I've gone in with 0.25% risk on this trade right here. Now the bigger account I've gone in with 0.04% risk. So there is a big difference between the risk tolerance on this. And the reason why I've gone in with a little bit more risk on this is because I have reduced the amount of pairs I looked at. But also, very importantly, the reason why I've gone a little bit more aggressive on this is because I've got more leverage. This is a European trading account, so it's got a 1-to-100 leveraging. So which means that I'm not going to run into equity margin issues because not with a 1-to-50 gearing ratio like it does here in the US. So depending on the trading account, depending on how much leverage I have, will also be dependent on how I'll manage that position. And being a small trading account, being a smaller trading account, I can be a little bit more aggressive because I'm not risking a whole bunch of money. But at the same time, I just don't want to go ahead and blow any trading account, right? We want to maybe trade a little aggressive, but also be able to have a little more buying power if price does move to a certain level that we need to go ahead and get back in again on those trades. So I'm ready to rock and roll on this. Also, if we go ahead and take a look at the Euro US dollar, this is the 4 positions we got right here. Let's take a look here. 863. All right, so I'm going to go to the Euro US dollar right here on a market of 863 is around about this level right here. All right, so 863 is right about here. See, here's 860. So we're looking at around about here to be our break-even point. All right, so we're looking for price to find support, then start working its way back up. Now we already hit the 1.6 rate. This is a slight bit of concern for me right here, and I'll tell you why. All right, as we hit the 1.6 rate, as price moves further past that level, this is going to become a resistance level. So look at that resistance level, 8448. So 8448 is going to be my resistance level. So that's a little further away. Let's go ahead and just clean up here. So if you take a look over here, I'm quite a distance away from my break even. All right, if I go ahead and mark it off, I'm around about, what did we say, we said 863. Yeah, I'm about, well, it's not that bad. I mean, we're 69 pips away from the actual entry. I thought it was a little further than that. Okay, 69 pips, not too bad. Not too worried about that. So 69 pips is not too far away. That's where we're expecting price to move back up again. So it actually hasn't moved. Wow, it looks further than it does, right? I mean, this is a daily chart right here. Showed me around about 36 pips. Is that right? Yeah. Wow, that's not that bad. Looks like if you look at this daily time frame, you assume when you look at the daily time frame, you're like, wow, look at this big bearish candle right here. But man, it's only 36 pips. Are you kidding me? Right? It's small. The daily trading range is only 43 pips. So we almost like covered the daily trading range for today. So we're not expecting any further downside action on the euro US dollar. It's very unlikely. I know that the news tends to push the market about 1.5 times the daily trading range. It's not quite happening on this, and I don't think we're going to get any further move to the downside. So I think we may find a bit of support there. Let's see if I can go ahead and zoom out a little bit and get any other levels of support. Well, traders, the truth of the matter is we are inside consolidation, right? A larger form of consolidation here as well. And price is going to probably want to go back down and retest this level down here about 436 or 438. So if we don't, and I believe we will get a recovery before price gets down here, but if we don't, and we look at the worst case scenario, we could see price moving down another 345 pips down south. What does that mean for us? It means that possible maybe another 5 positions, we're going to re-enter on another 5 positions. I think we're going to get out before that. There's definitely going to be a turnaround. And the reason why I'm saying that, traders, is because not because I'm looking at the euro and assuming that the euro is going to get any stronger, but really because I'm expecting dollar weakness. I'm going to go back to the dollar right here. And if you look at the dollar index right here, we're still at this level of resistance. All right. Now, there may be a little bit of upside move right here, just very temporary and very short term. But overall, we're still expecting price to turn around and head back down south. If I'm expecting weakness in dollar, that's going to push the euro US dollar back up north. And that's really what I'm banking on. And that's the reason why I'm holding on to the US dollar CAD. US dollar CAD, I'm selling US dollar CAD, and I will continue to sell US dollar CAD until we get this correction move on the dollar index. And so as dollar falls, I'm expecting both the euro to rally against the dollar and the US dollar CAD to dip against the Canadian. So that's what we're expecting right now. So those are the reasons, those are the thoughts behind the trade that we're currently holding right now. Well, as you can see, traders, that's our trading opportunities this week so far, as we've gone ahead and eliminated 1, 2, 3, 4, 5, 6, 7, 8 trades this week. All right, eliminated, not an option this week. And I did mention Euro JPY, Euro US dollar, both of them at 10 o'clock this morning are going to fire trading opportunities. Check them out. We'll go ahead and review that again tomorrow as we go ahead and take a look at the trading opportunities. Traders, hopefully you had a good time this morning, picked up some ideas of exactly how we go ahead and break down the chart, also how we also look at trades that we're currently in. Although this is a fully automated system, we're always going to be using a hybrid trading approach. We can get the best results if we pay attention to the market and make trading decisions based on how it's sitting between support and resistance. And when the markets are not doing what we hope and anticipated to do, then decisions need to be made, and we're the guy that's going to make those decisions. All right, traders, well, you have a blessed afternoon. I'll see you back again tomorrow, same time, 9 o'clock sharp. This is the Epic Big Dog, wishing you peace, joy, and successful trading. Until next time, happy trading.